everyone, and welcome to... Hello. Good morning, everyone, and welcome to the panel dedicated to sustainability reporting. The goal of this panel is to assess how the recent regulatory updates have impacted the activities of the different stakeholders within the financial industry. I'm pleased to welcome the three panelists of this event: Elia, Chief Executive Officer of Sogelife; Francesca Messini, Sustainability Leader at Deloitte; and Demyttenaere, Director, Client Relations at Morningstar Sustainalytics. If we look in particular at the insurance industry, Gian, which are the current needs in terms of sustainability reporting? Thanks.
Thank you, and good morning, everyone. I will not go into technical details. I will leave this to the specialist colleagues of mine. There's a long list of regulatory reporting, first of all, and extra regulatory reporting, but starting with the ones that we know, like SFDR, IDD, etc. The final objective of this reporting, of this regulation, is to direct or to orientate investments towards more sustainability and more virtuous. And this is in our insurance business model. It is across the value chain, starting with the distributors who need to provide pre-contractual and periodic information about sustainability of the funds clients are about to invest into. And then the asset managers who have also to provide regular reporting and periodic information, and they have to comply with the sustainability promise that they make to the client. So, and the last but not least, of course, the insurance companies who have to provide also regulatory and extra financial information about sustainability and about the impact of the investments. Now, we are still at the early stages of regulatory reporting with SFDR level 1, where we have to provide clients with the basic information via a link to the fund prospectus, and specify the level of impact and sustainability, what is known as Article 8 and Article 9, which is really basic. Now, this does not, in our opinion, cover the final or the ultimate objective of regulation or sustainability objective in general. It does not help clients to develop a comprehensive understanding of the impact their investments have, and they cannot measure whether the players in the value chain that I stated, they are meeting the promise, and does it really encourage them for sustainable investments to become the norm rather than the exception? I don't think this is enough, and insurance companies have to go the extra mile and do much more than mere regulatory reporting.
Thanks, Jean. Sorry for the issue. In the light of the experience of Sogelife, Francesca, could you please share with us the concrete best practices you observe in the market concerning SFDR topics, please?
Yeah, sure. Yeah, thank you.
It's complicated.
Yeah, indeed. I mean, what we heard from Gian is a massive amount of reporting and information that has to be put together. What does it mean in practice? First of all, SFDR is one of the P's. I mean, we will have other interlinked reporting and disclosure that are coming in place, or they're already there. And therefore, companies are, let's say, they have to take on a concrete approach. And in general, we speak about process, we speak about data, and we speak about system and tool that has to be put in place. What we observe in dealing with various type of clients is mainly the fact that, so we look at one side, one point is the data management, so how the data are collected, selection of the data provider, quality of the data, the coverage of the data, so that's, I'm sure my colleague will dig on that here. There is still a lot of work to be done. And the other aspect is really the design of an ESG reporting operating model. So usually in consulting, we use the term TOM, and I would say that we can replicate and use this term as well here, because it's really, we see the importance of have well-defined and well-structured operating model that on the data, given the fact that those information are coming from different sources most of the time, are used for different purpose, for different type of report with a different periodicity, and therefore concretely when we look into detail, you need something that is well-structured and has controls as well in place to make sure that everything can be checked and audited. However, all of this seems nice, but when it comes to concrete, there are still a lot of challenges that the various financial market participants or financial advisors are facing. First of all, I mean, there has been a lot of delay for the approval of the RTS. I mean, that has caused a bit of discussions on the market, let's say like that. Secondly, I would say the product reclassification that sometimes we experience is as well another element of challenge. And the other point is the availability of the data. It's really having data that are reliable, that are consistent, and are comparable. So that's something that is still there, and I think it would take time to be fixed.
Thanks, Francesca. Linked to the feedback from Deloitte, Ita, could you share with us how the new regulation have impacted your activities in order to collect company data?
Yeah, let's see. It works in one go. Yeah, of course. Yeah, I think for Sustainalytics or for everybody, collecting ESG data has always been a challenge already before the EU Action Plan, because we need to cover as an ESG research provider so many different topics without any standardized data requirements. So when we look at environment, we can look at climate change, biodiversity, waste, and for climate change, we can look at carbon emissions, which is basically the best data point out there. But still only maybe 60–70% of the companies really report. So that means that quite a significant part you'll have to estimate data. And the estimation models are based on like 5 years of incomplete data, so they're also not necessarily the strongest. And then on the social side, you'll have child labor, employee turnover, community relations, so all these different things where it's hard to pinpoint one variable that says everything around the topic. And I haven't even discussed the G in ESG. So there was always a big challenge for us to come up with valuable metrics and then also say how much or how important they are to a company. If for Shell it's more important to look at climate change than human rights, and if so, how much of the weight do you assign to it? It's very subjective. So I think for us, we had many different priorities, and then the EU Action Plan came, and it sort of changed all our focus to, okay, what is the EU actually asking from us? And it's a lot of data that we already had, but also a lot of new data. Some of it was already there, but also a lot wasn't there. So yeah, we have actually, like I said, shifted our focus completely. We have set up a team of now, I think, 100 analysts that research the data that is required by the EU Action Plan. I think on the PI data set, we see that there's a lot of things that were already happening, but also a lot that wasn't really there, but that is actually needed. And what I start to see is that when people or organizations get forced to report on it, they get more inventive, they challenge themselves more. So when we look at biodiversity right now, we always said it's very hard to find good data on biodiversity, and you have this one PI indicator that focuses on biodiversity. I don't think the data that they require, which is just to be specific, the number of activities a company has in biodiversity sensitive areas, it's not data that is out there, but I think as Sustainalytics we have been quite inventive there to come up with a very meaningful data point to look at what companies have incidents related to biodiversity in biodiversity sensitive areas. And we didn't do that before, but we could have done, but now we were forced to look at it that way. So you see there that, we have sort of been forced to be more inventive, and that you could almost compare it with maybe having an open kitchen in your home. You get forced to clean up more because everybody can see it. And I think it works well. It's definitely not perfect because there's a lot of chaos and unclarity on the market, and we're all in the same boat there, where you cannot say, well, this party has been doing it like this for 4 years and it works well. So we're all a little bit in chaos. I think it doesn't help that investors need to report before corporates, timelines shifting are unclear, templates are not ready, but all in all, I think it's a good development, which hasn't been always easy for Sustainalytics, but I think welcome for the market as a whole.
Thanks, Ita.
I think that the approach to do on a, let's say, best effort basis is the best, because, as you say, there is nothing that was really ready. There is no benchmark, so let's work on what we have.
Thanks, Ita, for your feedback. I believe you clearly assessed the current issues in terms of data availability and comparability among the different entities regarding sustainability metrics. Coming back to one final question to each of the three panelists, Jean, could you please show how are you implementing sustainability reporting requirements within your company?
Actually, my colleagues mentioned about the data and the complexity to get data, and the unavailability of certain data. But there's also the cost of getting data, and this is really, regulatory reporting is really, could be perceived as a heavy constraint. Now, I'm not stating a cliche, but it could also be an opportunity for us. It will oblige us to go beyond what is required by the regulation and try to influence the client. And at Sogelife, we see ESG in general twofold. One is promoting, and we think we have a role to promote sustainability, and we launched a product recently which is 100% ESG, and that is based on 3 dimensions, the exclusion of sectors. I think my previous panelists said that they don't focus a lot on the exclusion, but we say exclusion of sectors that operate against human dignity, the promotion of best-in-class ESG investments, and the commitment on impactful teams. And for this product, we got the label of Lux Flag, and to confirm that our will and our strategy. And this has to be integrated in the whole organization. Of course, in the business strategy, in the culture. And it will be, the cost of it will be absorbed by, everything you do. So if you are not invest only on reporting or providing information. The second aspect of the strategy is influencing. We say that we don't only need to promote, promoting is fine, of course, but we have to influence. And here, data and sustainability reporting could be an added advantage. We have to provide, and we are working on that, we are providing information for the client in a push and in a proactive manner to enable them to measure their investments, to measure them, they measure their sustainability level, they measure their positive impact level or lack of, and second, to position these investments and benchmark them against non-sustainable investments. And the third, to see the progress of their portfolio and to accompany them in the journey towards more sustainability. So in a nutshell, we could use this sustainability reporting as a tool in a proactive manner, once again, to help clients or to direct clients towards more sustainability.
Thanks, Jean. Francesca, could you please share some of the concrete challenges you faced, for example, regarding the incoming ET production?
Yeah. So the famous European ESG, there are some issues with that. Now it's the European ESG template. So indeed, it's something, it's a big aggregator of data, massive amount, roughly 600 and more lines, addressing SFDR, but not only. Let's say on top this element of having a set of fields, mandatory fields that are shifting, because now we have roughly 17. There are coming a bit more in few months. What we see as concrete challenge on filling them, first of all, again linked to the fulfill the mandatory in terms of data that are available, but not only availability of data, sometimes as well is linked as well of as the decision has been taken. Meaning, I don't know, especially when we speak about PI, is already clear what is the strategy to take in that respect. So it's a bit of ability, but as well decision, internal decision. And the second one, the major one, let's say, is more on the quality of this, the information that are there. Therefore, we believe that we will need a bit of a few cycle, and we expect that from Higos that will be a bit more streamlined and standardized in order to have a bit more quality on those templates. It's again another work in progress exercise where the quality will improve, but I assume it will have their benefit in few months.
Thanks, Francesca. Gian, could you share with us one concrete example of the issues you faced in terms of data collecting data?
Yeah, I think that companies don't report. So let's say when you look at the EU taxonomy, we are looking at gathering data around climate change mitigation and climate change adaptation around the 3 KPIs: revenues, capex, and opex. And while revenues and capex, there's some level of reporting on opex. There's almost no reporting, which probably doesn't mean that there's no opex in climate change mitigation, but for us it's impossible to say how much it is, and then it gives a bit of a distorted view to the end client, of course, in the end, like how much do companies actually spend here. And I think that is a basic struggle if you look at the results now. Let's say when a fund starts to report on taxonomy alignment and it has 80% taxonomy alignment, there's one thing that you can say, and that it's not a well-diversified fund, because there's only half of the industries that we look at have some level of alignment, but it goes down after the top 10 quite quickly. So that means that it's almost all, let's say, water utilities. And I think another issue, which is not so relevant now, but I guess that in the end the EU taxonomy applies to companies in the EU, and so maybe that's more a worry for the future, that in some scenarios an investor can be incentivized to invest, let's say, in a US company with lower alignment instead of a European company with higher alignment, because they don't have to report on the US company. So that I'm very curious to see how that will play out in the future.
To conclude this panel, I believe the clear message of this panel is that institutional investors should not merely comply with the new regulation on sustainability reporting and disclosure, but there is an increased awareness in terms of the importance of the extra financial metrics among the different actors involved within the financial industry. At FARAD Investment Management, we are fully convinced, fully engaged on sustainable investing and on sustainability reporting. And thanks to our Greenetica sustainable scoring system, we provide to the investors the possibility to see the sustainability synthetic report on key ESG metrics for each kind of portfolio, and we provide an alignment to the 17 Sustainable Development Goals as defined by the United Nations. I would like to thank all the 3 panelists for their precious contribution to this panel, and thanks to all the audience for attending this panel. Thanks.
Thank you.